Hello all and welcome back to Phenomenal UK for another product review. In today's review, we're going to be taking a look at L&G's Artificial Intelligence ETF, which we can see from the fund's aim. The ETF aims to track the performance of the Robo Global Artificial Intelligence Index via a physical full replication. They're doing this at an ongoing charge of 0.49% and a strong amount of AUM at 2.1 billion. Now, in regards to the Robo Global Artificial Intelligence Index, this particular index does have its own ETF within the US from Robo Global, but as mentioned, that's available in the US. Now, in regards to what this index is, it's an index that invests in companies of which invest in artificial intelligence. In regards to why THNQ, the index itself, they note they've got industry experts specializing in robotics, artificial intelligence, and healthcare technologies, whose mission is to define and identify the universe of artificial intelligence companies for investors within that index. As well as global revenues from the generative AI market could exceed $1 trillion by 2032, with AI infrastructures projected as the largest spend area as it grows into different markets. They also have a multi-cap approach with diversified access to large cap, mid cap and small cap companies with minimal overlap with most broad market indices as well. Just to note as well, the expense ratio of 0.75% from Robo Global's ETF versus that of L&G's artificial intelligence ETF that tracks that same index at 0.49%. So also cheaper as well to note initially. But now we have that context noted, going to head over to the fund analyzer within Finominal, where I'll initially note benchmark selection. I'm going to go ahead with the Phenomenal Global Technology Sector Index as our benchmark of choice, as I think it seems an appropriate benchmark to benchmark this particular ETF against the global technology sector. Though it is also interesting to note this particular ETF has the highest correlation of 0.94 with the IA Technology and Technology Innovation Index as well. So certainly worth noting for the IA sectors there. But as mentioned, I'm going to continue with our analysis now. Already noted on fees, which again I don't think is too expensive in regards to an ETF, though also not cheap, so somewhere in between there I would note. Total return has been higher for that of the ETF at 293.31% versus the benchmark at 226.56%. CAGR has also been higher, 21.27% CAGR, so a strong CAGR versus the benchmark's 18.14%. Volatility has been higher though at 24.9% versus the benchmark 16.8%, which I would expect given the concentrated holding of companies versus the global tech sector. Match drawdown has also been deeper at minus 42.06% versus the benchmark's minus 26.16%. Again, not too surprising just due to the concentrated ETF versus the global tech sector. And it's also worth noting this is a 5-star rated fund within the IA Technology and Technology Innovation Index. So initially, that fundraising alone shows us that it's already quite a strong fund initially. Noting on Sharpe ratio though, we can see a Sharpe of 0.76, which is lower than the benchmark 0.93. So that is worth noting. Now, if we look at performance benchmarking, we're seeing that close correlation against the global tech sector shown here as well on the performance benchmarking chart. Though if we scroll down in regards to recent strong outperformance against that of the global tech sector, you can see 2025 excess outperformance of 3.1%, but more recently 2026 has seen outperformance of 24.3%. So certainly strong outperformance against the phenomenal global tech sector as well. Going to head over now to asset classes and markets. Where we can see that diversified exposure across large, mid and small, with 61% in large, 20% in mid and 19% in small. In regards to the top 10 countries for this particular ETF, majority is within the US at 73% versus that of the global tech sector at 67%. We've also got 6% in the Netherlands, 5% in Taiwan, 2% in China, which is less than that of the phenomenal global tech sector at 9%. And we've also got 2% in Hong Kong, Uruguay, Canada, Cayman Islands, Germany, and 1% in Luxembourg. Let's look now to sectors, where we can see the main sector bet is in information tech, which wouldn't be that much of a surprise. That's 81.8%. Though we can also see investment in industrials, 6.7%, healthcare, 5.2%, financials 1.4%, and consumer discretionary at 4.7%. So interesting, if we go back to that index, it notes industry experts in artificial intelligence, healthcare as well. We're seeing that healthcare sector bet there as well coming through, so worth noting, I would say. Well, let's look now to the top 10 holdings. So we've got Umbrella Inc., as well as Amazon, Cloudflare, CrowdStrike, Alphabet. So quite household names I think you'd expect to see within here. So worth noting. But now let's go over to risk analytics. So selecting the risk model on a global basis, where we can see the majority of the risk comes from countries' exposure, as well as we've got equity factor risk at 8.9%. To note on countries, 70% risk contribution there. We've also got sector risk at 13.4% and some idiosyncratic risk there at 7.6% as well. If we did want to look at factor betas, so in regards to those countries, most of that is attributed from the global stock market. And in regards to equity factors, we can see minus 1.7 factor beta there. So if we look, we've got a positive of these equity factors, factor beta to the global growth factor at 0.5, which is one point I would note. In regards to sectors as well, 0.7 factor beta overall for sectors, and of that 0.8 within technology. Again, not too surprising, but it's nice to see that we've got that level of granularity there, should we wish to see that. Now, I'm going to go ahead to drawdowns and scenario analysis against the phenomenal global technology sector, where we can see those deeper drawdowns coming in. But if we want to see how this might have looked, say, during the GFC, let's replicate those returns, where we can see, again, those deeper drawdowns coming within this particular fund. So this is a risky fund. It does have a lesser Sharpe ratio, so less risk-adjusted returns than the phenomenal global technology sector index. But again, I wouldn't say that's too surprising, given the concentrated nature of this particular fund. If we want to look at return prediction, so based off of the capital market assumptions of very well-known providers, of which I'm sure you'd expect to see BlackRock, BNY Mellon, Invesco, JP Morgan, Citi, AQR. With those capital market assumptions, we can see the expected annualized return calculated for the next 10 years. Of course, this is an assumption. On a pessimistic base, we've got 7.37%, a base case 7.6%, and optimistic 4.61%. I need to check that. But overall, relatively strong expected annualized return for the next 10 years, especially from the base case, which is higher than that as well than the phenomenal global technology sector. So that's the main point of which I would note for this particular one. Now, it would also be good to see this against the IA Technology and Technology Innovation Index, as well as, again, the phenomenal global technology, as well as against the global stock market as a whole. So I've already loaded this within Finominal, where we can see those assets shown accordingly, where overall the LNG Artificial Intelligence ETF has outperformed the IA Technology and Technology Innovation Index, as well as the global tech sector, as well as the global stock markets as well, MSCI World. If we look to statistics in regards to Sharpe ratios, we can see the highest Sharpe goes to phenomenal global technology sector, but we've got a an exact Sharpe ratio for the LNG Artificial Intelligence ETF, 0.76. That is exactly the same as the MSCI World, also at 0.76. So we've seen the strongest CAGR for this particular ETF against all of the assets shown, as well as a Sharpe ratio that is in line with that of the global stock markets, and that's at a fee of 0.49%. So overall, a positive piece of analysis, I would say, for this particular ETF. I do hope that was helpful and informative. And of course, if there are any other funds or portfolios you'd like me to review next, please do leave them in the comments. But other than that, please do like and subscribe, and she'll see you all in the next one. Thanks all.